Afternoon, folks. Did China just silence the Fed? It's ironic, how certain things can affect our market. First, let's jump into disclosures. Of course, my views and opinions expressed herein do not necessarily reflect those of MotiveWave. MotiveWave has not approved or verified the content and is not making a recommendation. Of course, any prior success does not guarantee any future performance, and there's a detailed breakdown of some other disclosures that apply to my work. I would suggest that you print them and review them at your leisure. This is the candle that I'm talking about as far as the RMB offshore, which is the Chinese yuan. And, we had this 2015 candle. And, the last time they devalued this, they pushed this up to the $7 range from this. In other words, it started a cycle of higher pegs, which ultimately is devaluing the yuan against the US. And, today, that measures above 765 to the high side if this leg actually manifests. Now, that is just going to be brutal to equities. And let me just bring in a instrument study of the SPY just to use it as an example. However, this was well timed by the Chinese as well. They waited until the Fed speakers put a 50 basis point hike on the table for May, and they devalued yuan within 72 hours of that information. Now, that's very troubling because I find this to be particularly cunning, considering they allowed the yuan to fade, which initially really drew out any inflation that the Chinese would experience in the homeland, barring their current cost for commodity. Because realize they have been buying like a lunatic as far as commodities for the last 5 years. They have stockpiles that exceed global capacity for sometimes 2 years in some of their, like their wheat storage that's there is huge, almost as if they anticipated. And one of my big concerns here is if we look at this last period where we went through this and they started raising, we went into this bear market for nearly a year and a half after this hike in this zone right here, if you look at the SPY. And now we're already in this downtrend. So if we're going to go into a bear market, and I'm looking, this line is equality for the yuan, not the US equity, but we're already in a drawdown phase. And, but this also presents, a predicament for a fundamental investor or a long-term investor, because we're looking at an extended period of drawdown. The only way that you really can mitigate that is to micromanage your trades using Elliott Wave. And when your counts break and you have a reason to exit, for example, if the yuan pushes above this speed line, that would be a reason for me to trim on the long side. How to trim in a video this week. It actually turned out to be very timely. Speed lines that you can draw pretty much with any equity, currency, stock, it doesn't really matter. You have the ability to draw these lines, say, hey, if I close below this line, maybe I need to cut my long. And I'm using this as an opportunity to really encourage you to engage me with your positions, what positions you have open. All right. And I'm going to look at that chart based on my risk on, risk off thesis and my analysis from an Elliott Wave perspective on where to cut and trim. Now, you'll notice in this week's swing trade notes, I started managing speed lines on many of the charts that I added them to, because I think we're going through a period that's going to be particularly troubling for many of you in managing what positions you have. And hopefully I can help mitigate any drawdowns you might experience. So I'm willing to make the effort. I would encourage you to engage me, in the chat to help do this, because we really don't know how deep this is going to get, but this is very concerning for me. This is a change in demeanor here from this. They let it fade. And really, honestly, the reason they let it fade was to forego inflation in the homeland. I mean, this is cunning in my book. When I'm looking at this and I'm thinking about this, and I'm now about 16 hours into charts. I really started late Thursday because I saw what was going on in the markets. I ran through Friday, I ran through Saturday and today. And I even trimmed how I was looking at cryptos. I broke it into 2 different articles as a result of what I saw this week, because I wanted to spend more time on the charts and get more detailed on trimming positions that I thought had higher risk. And those like CCI, which held up really well, there's no reason to trim. There may even be an opportunity to add on that. We want to look for more positions that show relative strength in this market. But that's my 2 cents on the China devaluing the yuan. And I think the big question is, did they silence the Fed? And is inflation going to be with us for a little longer than we'd like it? Well, great trading, folks. Until next time.